Now there's kind of this conversation around these things of, can you use the Bitcoin on the balance sheet that you've taken on, and can you go out and acquire even say short dated treasuries, right? And pull in some sort of yield, or, go out and purchase cash flowing businesses. Now we're starting to see, some conversations around, hey, can we take the Bitcoin, collateralize it? We have this maturing, lending market around Bitcoin as, institutions are coming in. Can we use that to acquire cash flowing assets? And this is, I think, a very interesting, perhaps, next phase for these things.
What's going on, guys? In today's episode, we have Will Clemente and Ben Harvey, both of Keyrock. They are here to explain to us about a big report they just put together on Bitcoin Treasury companies. They go into what's going on with the premiums, how to think about debt, how to think about Bitcoin per share and the growth that's happening on that aspect of these businesses. And then we even get into the macro environment and worry about things like inflation, interest rates, and the frothiness in the market. This conversation is a ton of content you're probably not going to get anywhere else. So let me know on Twitter once you get done listening what you agreed with and what you didn't agree with. Here's my latest conversation with Will Clemente and Ben Harvey. All right, guys, you guys just put out this brand new report, Bitcoin Treasuries Uncovered, which obviously is going to get everyone real excited. You talk about premiums, leverage, and the sustainability of proxy exposure. Will, why don't you give us a quick rundown as to this big fat report that I read that had lots of data in it? What are like the main takeaways for people to understand about these Bitcoin Treasury companies that are now kind of assaulting Wall Street in the public market?
Sure, yeah. What's up, Anthony? Thanks for having us on. Been a little bit. Yeah, so for anybody who doesn't know, recently I joined Keyrock, a market making OTC firm. Before we get into it, obviously none of this is financial advice, do your own research, etc. I joined both on the corporate and institutional side, but recently there's been so much talk about these Bitcoin Treasury companies that I decided that I've taken it upon myself to kind of get in there with the research team and break down some of these companies in a bit more granularity than maybe I have just kind of looking through these things at my computer by myself. So work together with Ben, who's also here from the research team, to put this together. So obviously, for anybody who's been paying attention both in crypto or kind of the broader financial markets, these kind of are getting referred to now as crypto treasury companies have become incredibly popular. We've seen obviously the initially MicroStrategy was launched back in 2020, which we can get into specifically in like kind of the capital structure of MicroStrategy. But we didn't really see any copycats afterwards. But as Bitcoin's price appreciation has taken place over the last 2 or 3 years, it's become clear that MicroStrategy is been one of the best performing stocks in the world over the last 5 years. We have seen a ton of other call it copycats or people that have taken upon themselves to say, hey, the strategy's been proven out. Let's do it ourselves. And so can't even list on your hand anymore how many of these companies are. And I don't even think that was true 3 months ago. So this has been a huge trend in the markets, and we decided that we'd kind of do the best that we could to break down these things, how they work, go into kind of the capital structure of these things, look through the debt situation across all of these different companies, the at the money programs, and then also kind of tie this into a probabilistic view of how maybe they'll play out into the future.
All right. So what do you like the big takeaways as you looked at all these companies in terms of if you had to pick 3 to 5 things that people need to understand about these businesses?
Yeah. So, I mean, I would say the first one is that this has become an incredibly popular thing. So Bitcoin Treasury companies have now accumulated about 725,000 Bitcoin. I think this number is outdated even from the week that we put it out. I think we saw a few more. So DJT bought about 2 billion. MicroStrategy put out another press release this morning that they bought some more. But at the time of writing, there's about 725,000 Bitcoin, which is equivalent to about 3.64% of the entire Bitcoin supply. Of course, a big chunk of that is MicroStrategy, but this is on par with all the ETFs now. So the Bitcoin Treasury companies have now accumulated over half of the total amount of Bitcoin that the ETFs have accumulated altogether, which is I think a pretty staggering statistic. Also, in part of kind of our key findings was looking through what's the total market impact of these treasury vehicles. So 60 basis points of the kind of daily trading volume or price impact was attributed to these Bitcoin treasury companies on average in 2025. And on certain days, particularly when MicroStrategy bought, or now Strategy bought, that could reach all the way up to 9%, which obviously is very substantial. But again, the daily average is about 60 bips, which is fairly material, but maybe not as high as some people would think. I think maybe people have gotten this idea that these treasury companies are a quarter or half of the daily trading volume. It's actually on average been a bit lower than that. So it was one thing that surprised me. The total amount of debt that they have raised in aggregate is about $9.5 billion now, which is a pretty big number. And they've raised about $3.3 billion in preferred equity. And then we'll get into, I guess, the kind of individual structuring of some of these different companies and how they kind of differentiate themselves.
Ben, why is it only 0.6%? That seems like such a low number compared to what people think it is.
Yeah, it's a really low number. I mean, you've got to remember that this asset is trading at 50 billion a day, right? It's huge volume pumping through this thing. So even though we're talking about up to, I think Will said, 3.64% of the Bitcoin supply that flowed into these things, actually on a daily basis, it's not as much as you think. The other factor to remember is a lot of this stuff happens over the counter, right? I mean, if you take, for example, 21 Capital, Bitfinex and Tether, they essentially just handed over a bunch of Bitcoin just to get that treasury allocation started. It's not really all flowing through the market, but it can push up to 9%. We saw some days when strategy are really, really pushing through the market, but they're impacting price significantly.
But even 9% seems super low on like the highest days, right? You would think that on some of the highest days, it would be like 50%.
Yeah, exactly. But to be honest with you, sometimes they're using different strategies like TWAPs, or they're averaging out. They don't want to have too much of an impact on price. I mean, even just for themselves, for getting a better price in terms of that entry. But yeah, you're right. It's much lower than people think.
Okay. And then did you guys look at all, Will mentioned debt. How do you look at the use of debt versus equity versus kind of like where the capital is coming to fund these purchases?
Yeah, so it's really interesting. I mean, just studying this stuff, the way that they, and I say they in general, but really Saylor pioneered this, the way that they've securitized Bitcoin has been incredible, right? They've kind of offered everything from high interest debt all the way through to convertible notes. The difference in some of these structures is whether they actually have obligations in terms of their interest payments and dividends, right? So you might see a bunch of convertible notes which actually have 0% dividends or payments, but really the only risk down the line is dilution. But on the other flip side, you've got a ton of people who are raising loads of debt, 10, maybe sometimes even up to 15% interest payments on those. And they might not be able to service it down the line without selling some Bitcoin. So what you end up having is like a really different risk profile on some of these assets.
And then I saw in the report that Strategy's Bitcoin per share has grown 11x since they started. And so that's not 11%, it's 11x on an aggregate basis, which is like a 60-something% compound annual growth rate since they started doing this, which is on top of Bitcoin's price appreciation.
Yeah, I think this is the coolest and maybe most misunderstood thing about these digital asset treasuries. So you said Bitcoin per share. There's really two metrics that people need to care about. It's a NAV premium and a Bitcoin per share. So the NAV premium is essentially like, if you look at these things today, they're trading on average 78% above their Bitcoin holding.
Like a 1.8x, give or take, MNAV premium.
Exactly right. So you're paying like $180 for $100 worth of Bitcoin. And really people are thinking, why on earth would I do that? Well, there's three reasons. And one of them is this Bitcoin per share. Very quickly, the other ones are just a demand dislocation in terms of getting compliant exposure to Bitcoin, and volatility, which is slightly complicated, but we can come to that later. This Bitcoin per share is the main driver, right? So at the moment, if you were to buy passive spot ETF Bitcoin, it just sits there, does nothing, right? But if you want to buy from something like MicroStrategy, they're using this securitization of Bitcoin, this kind of like financial engineering to increase the amount of Bitcoin that they have, whilst either keeping shares the same amount of shares or slowly increasing the amount of shares at a lower rate than they are increasing Bitcoin per share. And really exactly what you said, Pomp, right? So they've 11x in the 5 years they've been going, 63% CAGR. that is what makes the premium acceptable, right? You can kind of frame it as an investor and say, I don't mind paying 80% above the current spot price of Bitcoin if they're growing at 60% a year and I'm going to hold it for 3 years. Like I'm going to be in the money in Bitcoin terms, not even just in US dollar terms, which is really the interesting thing about these products.
And so in a weird way, these Bitcoin treasury companies, I think people initially had pitched them as a way to get exposure to Bitcoin. Obviously, there's spot Bitcoin, there's ETFs, there's, kind of a whole plethora of different ways people can get just plain, kind of exposure. Really what it sounds like you're saying is that these Bitcoin treasury companies are accumulation machines. They are figuring out how to accumulate more and more Bitcoin per share, which is ultimately the thing that these shareholders are benefiting from on top of just the directional movement of Bitcoin.
Yeah, that's exactly right. I mean, obviously it's not just Bitcoin now, right? These things are, it's like the fastest institutional land grab in crypto ever. And it's not just Bitcoin anymore, it's ETH and Solana. I think one of the founders of one of the Solana ones, maybe DeFi Dev Corp or Solstacity, saying this is the equivalent of, rather than swimming down a stream, you're on like a speedboat down that stream. You just put an engine on the back, which is that financial engineering, right? And suddenly you're accumulating the underlying assets. I mean, way faster than you would if you were just putting your paycheck in every month.
Yeah, Will, how do you feel about the Bitcoin treasury companies versus some of these altcoins? It feels like, of course, people are going to go do it, but is there anything different to evaluate with the altcoin ones versus Bitcoin other than, just Bitcoin versus the underlying coin? Like, are there other considerations? Today's episode is sponsored by Figure, the largest non-bank home equity lender in the United States with over $15 billion unlocked on their lending platform. They are now in the crypto-backed loan space, and they offer industry-low interest rates when you use your Bitcoin as collateral to get cash. You can access interest rates starting at 9.9%, the lowest fixed rate in the industry at 50% LTVs. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. You can go to figure.com/pomp or click on my link below to take a Bitcoin-backed loan with Figure today. I'm an investor in the company, and I have spent a lot of time trying to understand this product. And so go visit figure.com/pomp to better understand exactly what they're doing and how these rates work. You can go to figure.com/pomp today. Today's episode is brought to you by Simple Mining. Have you ever been interested in mining Bitcoin? As a miner myself, I've been using Simple Mining for the past few months, and the experience has been nothing short of seamless. I mine with the pool of my choice, and the Bitcoin is sent directly to my wallet. Simple Mining, which is based in Cedar Falls, Iowa, offers a premium white glove service designed for everyone, from individual enthusiasts to large-scale miners. They've been in business for 4 years and currently operate more than 20,000 Bitcoin miners, including mine. Their electricity is over 65% renewable thanks to the abundance of wind energy. Not only do they simplify mining with their top-notch hosting and on-site repair services, but they also help you benefit financially by running your operations as a business. This approach offers 100% bonus depreciation to optimize the profitability of your investment. Do you ever worry about the completion of maintaining your mining equipment? They've got you covered there too. For the first 12 months, all repairs are included at no extra cost. If you experience any downtime, they'll credit you for it as well. And if your miners aren't profitable at the amount, simply pause them with no penalties. When you're ready to upgrade or adjust your setup, their exclusive marketplace provides a seamless way to resell your equipment. Join me and many satisfied miners who have simplified their Bitcoin mining journey. You can even get started today with a 7-day miner trial. Visit simplemining.io/pomp to get started today. That's simplemining.io/pomp to get started today. With Simple Mining, they make it simple. But is there anything different to evaluate with the altcoin ones versus Bitcoin other than, just Bitcoin versus the underlying coin? Like, are there other considerations?
Yeah, I mean, there's, I guess a few things. One is just if you go out and raise, I don't know, even like 9 figures for, a coin that's maybe outside of the top 5, top 10, then you're going to be a much, much higher portion of the volume than the like 60 bips on average that we're talking about all of these Bitcoin treasury companies are, because they're just much, much smaller assets than Bitcoin. So, the benefit of that, of course, is that, that for people that are looking for exposure to the underlying, that, might be beneficial for the price action, but, it might be a bit more constrained on the margin, in terms of liquidity and execution, as well as, in theory, if the market rolls over, going back the other way. The other component, which I think, we can get into for both, the Bitcoin as well as the broader treasury companies for the other coins as well. The proof of stake coins obviously are proof of stake, so you're able to generate yield on them. I think this has been something that Tom Lee and Lubin have been really pushing on the ETH front as kind of a narrative of you're able to generate yield on the ETH that you have staked or whatever other proof of stake asset, and then you're able to kind of use that income to service any like interest payments, or if you have dividends on preferred shares that you've issued. Whereas obviously with Bitcoin being proof of work, you don't have that. And this is a whole nother discussion about we kind of break down a couple of the different structures of these things. So some of them you look like a micro strategy. I guess we can just fully get into it. So like they have several different offerings. They have STRK, which has this 8% dividend. It's convertible to MSTR, and then also has a cumulative dividend. STRF has a 10% dividend. It's cumulative as well, but non-convertible. And then STRD, which is a 9% dividend, which is non-cumulative, almost like a junk debt. So they have like several different preferred share structures now. They have the common stock program where they're just issuing shares at the money, as well as the convertible notes that they've issued. Then we also we have things like Metaplanet, where they're taking advantage of essentially putting on a short Japanese bonds, long Bitcoin trade by basically taking advantage of the fact that Japan is subsidizing their bond market via yield curve control. But for some of these other companies, maybe we'll mention individual names, but there's some that are strictly saying hey, we're going to spin up an entity and then we're just going to issue common stock, and something like that is strictly relying on this idea that you're going to have this perpetual premium to NAV that you're able to withstand. And if that kind of reflexive loop starts to lose momentum, then it could be problematic for those types of structures. But what we're now seeing, to tie it into your question about the altcoin structures and the thing I mentioned about like ETH staking, now there's kind of this conversation around these things of, can you use the Bitcoin on the balance sheet that you've taken on, and can you go out and acquire even say short dated treasuries, right, and pull in some sort of yield, or go out and purchase cash flowing businesses to then use that to service any debt or dividend payments that you have to make. I think for individual investors now, all of a sudden that adds a whole nother thing of, hey, now you have to underwrite the execution ability and the quality of the management as an investor, which is a whole perhaps different skill set in some circumstances perhaps than being able to structure a Bitcoin treasury company. So that's like something to consider. But now we're starting to see some conversations around, hey, can we take the Bitcoin, collateralize it? You have this maturing lending market around Bitcoin as institutions are coming in. Can we use that to acquire cash flowing assets? And this is, I think, a very interesting, perhaps, next phase for these things.
Now, Ben, when you take a look at some of the capital that's coming into this, did you guys have a chance to look at how much of that capital is hedged? Like, that's one of the things to me that feels like these equity investors who are pouring capital into these companies, some of them want long exposure to the stock. Some of them want exposure to the premium, but not necessarily to the movements of Bitcoin or kind of anything on that front. And so what did you kind of take away on that end?
Yeah, so it's interesting. I mean, the first thing to state is that $8.2 billion worth of strategies offering with through convertible debt, right? And I think it's gone up even just this morning before we started recording, but it was about $10 to $15 billion that's been raised across the space. So that's a huge portion, right? And a lot of what's going on there is convertible debt arbitrage, right? So MicroStrategy has, I think it's even in a top 86th percentile for open interest in options. It's above Microsoft. It's absolutely huge in terms of options open interest. And what that opens up for these convertible debt arbitrages is the ability to pick out different parts of the option profile that they want to be exposed to. Now, the convertible debt, like we can break it down into a bond and then a call option essentially. What these arbitrages are doing is going short everything other than volatility. So they're hedging out delta, they're hedging out duration, the works, and they're just going long vol, because typically the convertible debt instruments, their volatility is much priced way lower than actual real volatility. Suddenly when vol spikes up in the market, we're seeing the premium on these kind of debt shoot through the roof, which creates a bit of a flywheel effect, right? Because then strategy or whoever else can go and harvest that premium, increase their Bitcoin per share, and then suddenly their premium goes up even more because people think, great, I can afford to pay more of a premium for future growth, right? So you get this kind of flywheel effect. To answer your question, it's not clear exactly how much of it is hedged, but I wouldn't mind betting that 8.2 billion right there is hedged.
Got it. And then, Will, one of the things that I think most people who are looking at this are asking themselves, how much of the performance of the Bitcoin treasury companies is Bitcoin? How much of it is just like a macro enthusiasm because we have NASDAQ and S&P and everything kind of hitting all-time highs? And then how much of it is people don't understand what's going on, right? And they're just kind of blindly buying things and it's all froth in a big bubble. How do you think about like the main drivers for these businesses? Is it something that's rooted more in Bitcoin, or is it something that's rooted in this idea of enthusiasm in the stock market in general? And these businesses are kind of a big beneficiary with that MNAV premium that people then are harvesting to go buy more Bitcoin. Today's episode is brought to you by Zappo Bank, where eligible members can unlock the power of Bitcoin without selling it. Need cash fast? With Zappo Bank's Bitcoin-backed loans, you can access 40% of your Bitcoin's value, borrowing as much as $1 million for a full year with low interest rates, zero fees, and no early repayment fees either. Now here's the best part. You keep your Bitcoin, meaning you get to watch your holdings grow as the price of Bitcoin increases. Whether you're looking to buy a house, fund your child's education, or seize an exciting investment opportunity, these loans give you the flexibility to access cash without selling your Bitcoin. Unlike traditional loans, Zappo Bank's Bitcoin-backed loans have no minimum repayments, no early repayment penalties, and the flexibility to settle your loan in USD or Bitcoin whenever it suits you. It's liquidity entirely on your terms. Zappo understands the unique needs of Bitcoin holders. That's why they have developed a product designed specifically for you. With over a decade of experience in the Bitcoin space, Zappo Bank has been a trusted partner for those looking to make the most of their Bitcoin while keeping it safe. Your Bitcoin stays safe in your vault, untouched, never lent out, and secured in a global network of military-grade bunkers with cutting-edge security technology. Head to zappobank.com/pomp to learn more. That's XAPOBANK.com/pomp. Go check them out at zappobank.com/pomp today.
Yeah, sure. Pretty loaded question. I guess, this might be a good segue into maybe just talk about, the broader market as well. I think, Bitcoin has done well because we've had these tailwinds over the last 2 months that have, kind of formed for a variety of reasons. And, these treasury companies have been, seen as a way for people to get, kind of cheap leverage or beta, getting kind of, increased exposure to the underlying of Bitcoin for sure. There's a variety of factors that we talk through in the report in terms of, the capital structure, something like MicroStrategy's got through the bear market. Anthony at our previously, own research firm, we put out a report on MicroStrategy within a month of the bottom and said that they'd be okay. And I think back then, a lot of people were saying they're going to go bankrupt and stuff. And so for anybody that, understands the capital structure of MicroStrategy, I think they're probably a bit more fortified than some of the other guys. And then, frankly, I would say another component is, who can you put together that's, kind of bringing this thing to market in terms of, distribution as well, that perhaps has become a factor. But yeah, maybe we can use this to segue into the broader market. So, I guess to touch on kind of the macro situation and, the backdrop for the last couple months. So if we go back to, pre-April, heading into April, the Trump administration had been very vocal about basically saying, hey, we want to try to get yields down. The way we're going to do that is potentially by, triggering some economic weakness. We saw, very, very sharp correction. And then that got exacerbated by kind of a, shock around the tariffs. But within a week, we saw the bond market seize up. The MOVE index, which is the volatility measure for fixed income, blew out. And so, that's when you start to run into, some issues, in terms of, now a lot of these systematic funds are basically just like short volatility. And so, that caused a lot of, positioning unwind. But then, very briefly after, you know, Trump said it wasn't the bond market. It seems like that, probably isn't true, to be honest. Did basically a complete 180 from, him and Besson talking about, hey, we're going to cut spending and do all these things, to now it's, hey, we're going to run everything as hot as possible. And so, now we've gone from, hey, we're going to, pull back on spending, to we're just going to juice everything. And so, now we're, no longer cutting spending. Fiscal policy continues to be loose. The Fed obviously hasn't hiked rates. And there's also a decent likelihood that we may see, Besant, rotate the allocation of bonds from, the long end to the short end, kind of like Yellen did, even though that, he gave Yellen a hard time, which is stimulative. And we're doing all this into, credit spreads being low, the stock market's fine. So they're really, exacerbating everything, and that's caused people to go out further on the risk curve, and that's exactly what we've seen. So, obviously, equities have done well. Bitcoin's done well. We've seen, gold consolidating, but gold looks like it's, kind of putting in a bit of a bull flag for people that are, a bit more oriented towards like TA. And then, recently we've seen a lot of the, kind of far tail crypto, stuff pop off. This is just classic. We see Bitcoin run up. We've seen this rotation into ETH over the last week. Now we've started to see, some of the even further tail go crazy over the last, couple days. Obviously, this stuff, can go on for, longer than you feel like it can. But I would say, in terms of, at least on the crypto specific side, at this point, with Bitcoin broken out to all-time high, I played the all-time high breakout on Bitcoin. I was, extremely, probably the most long I had ever been on BTC pre all-time high break, but I've taken some of that off. And, one of the things that has me, obviously not, I never short crypto, but, has me a little bit hesitant to pile into, the super far tail here. And like any prolonged, period of time, just like running stops tight on anything that I do in my personal account. Because if you look at, one indicator I really like to look at for froth now is the altcoin open interest dominance. So this basically looks at like the total amount of futures open interest on Bitcoin, ETH, and then alts as well. So like all the far tail, risky assets. Whenever the percentage of total open interest for futures in crypto on alts flips that of Bitcoin, so basically anything non-BTC or ETH, that's been a very good, local top indicator on like a, couple week basis. I posted this last week, and today, just a week later, it already is getting close to crossing. I'd suspect that that's probably going to take place within the next week or so. So, gotta play the music while, gotta dance while the music's playing. But things are definitely heating up. I think like people used to look at, I used to look at like funding rates or like the futures basis as an indicator for froth. I don't think these things are as good of indicators anymore, because you just have like a lot more sophisticated market participants that are like arbitraging funding. So they'll, go long spot, short the futures, same on the dated futures as well, especially on like the CME, they'll go long spot, short the future, capture the basis. So, I like this altcoin open interest dominance thing as a kind of, measure of froth in the market. Obviously the treasury companies have been adding to that, but frankly, I don't think it's quite clear what exactly is going to cause them to unwind. And to go back to the report, specifically on these things, we broke down probabilistically, the ways that maybe some of these things can play out. My personal take, I don't know if Ben disagrees with me, is that I think these things will likely become a victim of their own success. When you have a certain amount of money that's coming into these assets, but you have a huge influx of the total amount of supply, you just end up diluting the flows across the board. And again, it's hard to quantify like what exactly is that amount that it dilutes. And something like the converts might be tapping into a different type of market participant than just these at the money issuances for like the far tail altcoin treasury vehicles, for example. But I think that's a sign of froth indicating, again, I don't know it's tough to say like what is the what is the catalyst for these things to unwind. It's tough to say. I think from like a macro perspective, that I guess the last portion, to tie it into what I was saying earlier about them juicing everything. I'm in the camp that I think inflation probably picks up towards the back half of the year. It's hard to say, is that caused by tariffs? Anything? I know you have a stance on that specifically, but I generally think that inflation picks up towards the back half of the year just because we're juicing everything. The wealth effect from stocks. Household ownership of stocks is at all-time highs. Even though it's concentrated in the more wealthy part of the population, it's still at all-time highs. So when stocks are going up, there's more money coming into the system, and then people spend that back into the economy. We're juicing everything with asset prices near all-time highs and credit spreads being very low. And I think you've got both inflation swaps, so inflation protected securities, as well as the yield curve. So the spread between shorter dated treasuries and longer dated treasuries is starting to break out after kind of consolidating for the last month or two. And so I think all these things are pointing towards a higher likelihood of inflation picking up. So from my perspective, again, like I said, I took some of the leverage off that I really put on as Bitcoin started to break through all-time highs, but obviously still have a core Bitcoin position. I like gold here, and I don't like bonds. I think bonds are in quite a predicament heading into the back half of the year. We had this kind of window of weak data that I think brought yields down in June, but we've gotten through that with NFP data, and I think we've kind of resolved people's concerns about the economy specifically for now. I think the main we've also started to see PPI came in soft last week, but when we include imports, you see core goods is starting to pick up as well. But I think the final hurdle for yields is we have FOMC coming up, but the day before that we have the QRA. And so this is when Scott Bessent, the head of the Treasury, is basically going to, kind of talk through how he's thinking about, issuing U.S. debt for the coming quarter or so. And so, there's a chance that he kind of goes full Yellenomics and says, "Hey, we're going to issue everything at the short end of the curve," which I think is short term, bad for or good for yields coming down, but over the long term, you think of 20, 30 years, whatever. I think this is bad for longer term inflation expectations because again, you're just further juicing things. So I think the bond piece is the tougher of the three because you're kind of going against the government, which has these levers that can pull with that or the SLR exemption stuff. So lowering the collateral requirements for banks to be able to buy bonds. But overall, I think I definitely wouldn't want to be long bonds. But I have a small, well, I don't want to say small, but I have a low double digit percentage of my portfolio is short bonds with like kind of a 3 to 6 month time horizon. But if we get through the QRA and we don't see Bessent increase issuance to the shorter end of the curve, I would expect that could start to pick up. So all that to say, I kind of agnostic to the far end of the risk curve for at least crypto stuff, on like a couple week basis, just because things are getting so frothy. But if I was going to close my eyes and had to put my positioning together for 2 months and couldn't do anything, it'd probably be long Bitcoin, gold, and short bonds.
Ben, anything that he said that you either disagree with or you think you should add?
No, I think he generally hit a point. If we're looking on chain, which is mostly what I'm doing day to day, we're seeing most of that play out. I mean, if you just look at what NFTs were doing this morning, I think 10 million worth of CryptoPunks were swept. We've seen grails like ringers, fidenzas, everything suddenly start to pick up over the last week or two. And that really does tie into what Will's saying in terms of the way that risk is kind of shifting from majors into alts and then maybe a little bit further out. I mean, alts is an indicator flying up. Is just another way of expressing the alts OI. And that's something I've been paying a lot of attention to.
Got it. And then when you think, Ben, in terms of the Bitcoin market, one of the things that's interesting to me is Bitcoin dominance. I think it bottomed somewhere in like the low 30%. It shot back up over the last 2 or 3 years to over 60%. What is your expectation for, where could it fall or grow to in this bull market?
Yeah, good question. I mean, I think the way that we're headed is going to start to come back down, especially if you look at the ETH BTC chart and then even like Sol ETH chart, right? Those two look primed to pick back up significantly. I think it probably comes down maybe even by the end of this year, early next year, in the low 40s kind of ranges where I'd expect to see it. I haven't paid too much attention to the graph the last few days. I imagine it shifted around a lot with that ETH price action. But those are kind of the two kind of areas I'm looking at.
Got it. That makes sense. And then is there anything on the interest rate side that either one of you guys thinks is interesting in terms of, there's obviously a lot of pressure on Jerome Powell and the Federal Reserve to cut rates. He's done a pretty good job of resisting that pressure. But you got to imagine in the second half of the year, there will be at least one rate cut, if not more. How do you guys anticipate that playing into Bitcoin in particular?
Yeah, I mean, I think to tie things back and kind of like what we were just talking about. I think when you zoom out, maybe this is a bit more esoteric, but I think the Federal Reserve is no longer likely to exist in the same way or fashion that it has. Maybe over like the last, I don't know, decade, 2 decades, several decades. Now I think the Fed's mandate will no longer be to manage inflation and price stability as much as it will be to help manage the United States' debt situation. And so, I think some of this rhetoric coming out of Trump, for example, this is like borderline like emerging market stuff that we're talking about, right? Like firing the Fed chair so that the president can dictate what interest rates are going to be. Effectively, Trump's almost like trying to double forward guidance the Fed, because he's saying, hey, I'm going to put my guy in 6 months and he's going to cut rates. So forget what these guys are doing because the market's forward looking. So you're going to start pricing in what my guy is going to do in 6 months and override the forward guidance that the current Fed chair is providing. And of course, there's a whole Fed committee, but I think going forward, the lines between the Treasury, the Fed will get blurred a bit because we kind of have to, right? We kind of need this like cohesive work together between these two entities to help massage things, to help service our debt situation. And I think part of that is ultimately, we're trying to grow our way out of it, which is like the rhetoric that the Trump administration has pivoted towards. But we need inflation to help service the debt burden. And so I would suspect that slightly higher levels of inflation for the coming decade, or at least 5 years or so, maybe kind of the new norm.
Got it. And then in terms of the report that you guys put together, where can people go find this thing?
Sure. Yeah, it's on the Keyrock website under the research tab. So Ben and the research team put together a ton of great stuff. I just happened to find this specific topic interesting, so I hopped in and helped out on it. He did a lot of the heavy lifting. So there's a ton of stuff on there. No email walling. So if you enjoy this your conversation, be sure to go check it out in more detail. A ton of graphs in there and visuals, things like that.
It is it's very dense in a positive way, Ben. So I don't know if you like sat down one night late at night and just started banging it out or what, but I read it and it's pretty incredible in terms of the level of detail. But I think also there's kind of the narrative, but all the data that you include is pretty compelling as well. So you did a fantastic job putting this together.
Thank you. Glad to hear it.
Absolutely. All right, guys.
Caffeine.
Huh?
A lot of caffeine.
Yeah, well, that's I think that's what everyone would expect, is a report like this doesn't get written without something stimulating your brain.
Okay.
All right, guys. Thank you so much for taking the time to do this. We'll do it again in the future.
All right. Thank you, Anthony.
Thanks, Pomp.